Hey, what's up, everybody? So in this video, do a little gold and silver report. People have been messaging me all week, about every day about gold and silver. And then, in the VIP group on Friday, a lot of people some people made money getting long gold. Some people made money getting short gold. I did this past week. So where are we going? Are we going higher? Are we moving lower? That's the thing we got to ask ourselves. So that being said, let me share my screen with you. Thanks for tuning in. And if you're interested in learning about my trading methods, our amazing community of traders, click the link below to get started. And let's get right into the video. All right, everybody. So here we are looking at the euro here. Let me change this around and pull up our metals. And so this is, not much has changed. This is a weekly chart here. We've cleared all-time highs. So there's two scenarios first that I, have to throw out here. If we get a dip back to 1920, 1925, 1930, this should be, for one, can expect a bounce here, I would say, because this is a breakout point. This is the breakout point in terms of the former all-time highs, which are at now. So we're at the former all-time highs, okay? We've broken up above here. Now we have to see, are we going to stay above here? That's the big question. This is what we're looking at. Long-term breakout from here, breakout from this level. And, you could pretty much say bye-bye to gold. Now, we're looking at the monthly chart here. Look at the extreme reading of how overbought we are on the monthly chart. Once you see a reading like this, you got to pay attention to it, because just all you got to do is go back in time. The market repeats itself, and you can see what happened when we hit these levels. So, not that big of a turnaround here, more of a consolidation, and then another press higher, and then we got a dip. So I call this a double tap. And so this is, clearly this is over a span of, because we're on a monthly chart, just to clarify, May 1st, 2006, March 1st, 2008. So let that sink in for a while, right? So pretty much 2 years from here to here. Look how far we've gone. This has been about a year now, but look where we're at. So the question is this going to be a false breakout here? This is what I'm thinking. Not really a false breakout, but if we retest this breakout zone and then move below, press below here, to one of my favorite traders is saying 1750. So that would be a massive drop. I just want to explore that a little bit. This seems pretty possible. Okay, so this is what I call a throw over. We got a throw over line here. And if we get down, and it's a big if for sure, below 1925, then what I would be looking for is a retest of this throw over line. Now, if we got below here, that would be a whole thing altogether. And what this is and was, descending wedge. So you can see we have a confluence of supports here. So this would be a good place to kind of put your toe on the water if we get in there and get short. Put a stop loss, sorry guys, put a stop loss below the throw over line. Now if we get below here, that would be rather bearish for the metal. So it's not like we're going to have a massive sell-off, but from this low, this is the COVID breakdown from the market breakdown, boom. And then, so we have our Fibonacci's from the low to the high here. If we break down to this 38.2, that seems pretty plausible. 38.2% retracement. Write this down if you're taking notes. This is free information. 38.2% retracement is typically a continuation retracement. So that would be a continuation before we resume the rally higher. And I don't see any reason why we don't hit 2,500, three grand, potentially 3,500 to 4, who knows? But in order for that to happen, we need a good dip. Yeah, I mean, sure, we could just keep just plowing higher and higher, but however, eventually we're going to want to see some sort of dipping action for sure. So this is kind of what I'm looking at long term, or not just so long term, right? Short term. And it did look like, and I won't go into details, you can check out my last video that I posted, that we had a false breakout in the euro here. If this is the case, capped off by the 61.8% retracement, here's the wick, and we're back below this multi-year trend line, that would be a pretty bullish sign technically for the dollar if we're looking at the correlations across the board. So I'm definitely all about correlations and finding correlating markets. Here we are looking at silver. So weekly looks weaker than gold. Take a look at the monthly, still has some room to move higher. But if we go to the 4-hour, this kind of structure here, which we did break back above support here. You could even consider this a breakout. But, excuse me, sorry for the yawns, everybody. It's been a long morning. But we didn't take out this high. This high right here, I think, is pretty significant. So what we need to do, and, this could go both ways. This could be a false breakdown here. But I'm looking at it in terms of we need a reset. We need a good reset. Look at this divergence. Wow, here, and then dripping lower. So relative strength is falling off dramatically here. Looking at the 4-hour. So where do we go from here is the real question. And so this was the massive triangle that we broke out of. Breakout point comes in at about 1935. And so, God, if that would be a gift from manna above God if that were to happen. Well, I kind of doubt it. But here we are. Now, if we're looking at Fibonacci's in terms of silver, from this is a false breakdown point to the current high, check out where we are on the weekly chart, then let me move this stuff so you guys can see better. I think these 38.2% retracements on gold, on silver, would be that added dip. So that would have us back down at around 21 bucks. 2062. God, this would be an excellent buying opportunity before the next leg, because especially in silver, this is the former all-time high in silver. And, gold's already surpassed it. I don't see any reason why silver can't make another run to challenge this high, because, I would say, especially if nothing changes politically, God, we have this election coming up, even though there hadn't been one debate, not one. So I don't even know what the hell's going on. But what I do know is it's going to create a lot of uncertainty in the market. And then COVID-19 plus bailouts plus inflation of the dollar. It's just a breeding ground for metals to push higher, I'm telling you. So what we're looking for that good dip. We're praying for it. And so it happens, because, I don't want to get an entry here, right? Because look where we are. Look at the daily chart. But this got bought up pretty fast. So If we look at it on the hourly, very close to a breakout here. So be careful. It's kind of unclear. What I'm going to do is kind of sit back, and we could even see a move like this. Breakout up, challenge these highs here, challenge these highs, and then get that next push down, which would give us enough firepower, give us enough. And, we are also creating triangle consolidation here, right? So the market is pretty unclear because we're checking ourselves after a breakout. Look how we're falling off here on the hourly RSI. So, be careful trading these metals right now. It's very unclear what the next move is to be. But what we do know is if we can be patient and stick that dip and get in there on a good entry, then it could be very, 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 very profitable in the future. So hope you all found this video helpful. Hope you're having a great weekend. Stay tuned for our weekly Outlook video, and I will see ya in the VIP chat room. Everybody, thanks for hopping on. Adios.